there is a correlation, but it is not as high as, small cap equities to large cap equities. The more institutions get involved, the more correlations will go up. But right now, if you look at the statistics, the correlations in terms of returns and risk among these assets, very different.
Hey guys, welcome back to Everyday Finance. In this video, Cathie Wood discusses Bitcoin and crypto. Bitcoin's bullish trend appears to be facing heightened risks, as critical on-chain metrics indicate the potential for a market peak. On-chain analytics platform CryptoQuant indicates that the Bitcoin Cycle Index, IBCI, has transitioned into the distribution region, a phase that generally signals potential market corrections or downturns. This represents the initial occurrence in 8 months where the IBCI has attained such levels, indicating that investors may start reallocating coins, notwithstanding Bitcoin's prevailing price momentum. Despite the ambitious price projections for Bitcoin in 2025, with estimates reaching as high as $150,000, the IBCI, which consolidates 7 prominent on-chain metrics such as the pool multiple, spent output profit ratio, SOPR, and unrealized profit loss, suggests a more cautious approach. Historically, a nearing of the IBCI to 100% indicates that markets are frequently approaching potential corrective phases or the onset of bear markets. Nonetheless, the IBCI has not yet approached sell-off thresholds, indicating that there is still potential for the market to sustain its upward trajectory prior to possibly hitting a peak. Timothy Peterson observed that Bitcoin's present market trajectory exhibits a significant 90% correlation with the bull run observed from 2015 to 2017. Suggesting that Bitcoin's price could reach $137,000 prior to facing a substantial correction. While there are warning indicators present, the volatile behavior of Bitcoin's price suggests potential for additional gains prior to the establishment of a clear bear market. Market analysts are paying close attention to Bitcoin's price movements, given the cryptocurrency's inherent volatility and the influence of macroeconomic factors on its development. The interplay of global economic shifts, regulatory updates, and institutional adoption is creating a multifaceted market landscape. Despite the prevailing bearish sentiment, there exists a bullish potential for Bitcoin, characterized by short-term risks alongside long-term opportunities. And lots of things Cathie Wood discusses, so please watch the video to end and share this video, and subscribe our channel Everyday Finance. Thanks.
Significant clarity in terms of regulation. We will get legislation as well. I think many more policymakers in Washington understand that this was a single vote issue, voters, especially young voters. And so this is becoming much more of a bipartisan issue. And of course, you have the executive branch also supporting it mightily, proposing that we include Bitcoin in Treasury reserve. So you've got, I think we're going to have support of all 3 branches of government are going to be supportive, which is a big change.
Well, it would be a big change. And I mean, are we really sure of that, I suppose, is the question, because Gary Gensler, the SEC, had a very different view of the risks and the retail investor protections that should be in place when it comes to crypto. There are surely a lot of people who still believe that's important.
Well, I think he didn't understand that this is the next big wave of the Internet. This is the layer of the Internet that developers did not build in the early 90s because no one thought anyone would buy or use financial services on the Internet. I remember back then, no one was going to give their credit card to the Internet, right? This is the next big wave, and it's a huge efficiency move for the financial services sector. So in terms of Bitcoin specifically, it is really the leader in a new asset class. And we have a paper out on that. You can see the low correlations, which do define a new asset class. And it is a global monetary system. It's a very big idea. My professor, mentor, friend, Art Laffer, when he collaborated with us on our Bitcoin paper in 2015, he said, this is what I've been waiting for since the U.S. closed the gold window in 1971. So he has been energized by this new movement towards a rules-based global monetary system.
Do you think Trump's going to be on board with that? The president has indicated he's quite a big fan of the US dollar, and it sounds like what you're suggesting is a replacement for the US dollar.
No, we actually think that, that these two will coexist, and if anything, what we're seeing with the stablecoin movement, which is how people, is the on-ramp into decentralized financial services. They're all backed by Treasury securities, which de facto they're backed by the dollar. So we think that movement is gaining momentum here, especially now with the deregulation taking.
The cryptocurrency market is currently undergoing a notable decline, as evidenced by a substantial drop in total market capitalization, which has decreased by more than 6.4%, now resting at approximately $3.38 trillion. The recent decline has prompted apprehension among stakeholders regarding the likelihood of additional downturns. The decline can be primarily attributed to the introduction of DeepSeek-1, an innovative, open-source artificial intelligence model emerging from the Chinese AI industry. This innovative AI technology is generating significant market disruption by competing with top AI models while utilizing considerably fewer resources and costs, influencing the performance of AI-related stocks and cryptocurrencies. The tokens linked to these projects, including Render, Near Protocol, and The Graph, have experienced significant declines, with losses of 14.6%, 11.4%, and 11.41% respectively, reflecting a shift in investor sentiment towards a more cautious, risk-averse strategy. The cryptocurrency market is currently facing a significant number of leverage liquidations. The use of leverage in trading has intensified the market decline, resulting in a series of liquidations as decreasing prices compel traders to exit their positions. Over the last 24 hours, approximately $853 million in positions have been liquidated, with a significant focus on long positions. The current liquidation activity has exacerbated sell-side pressure, resulting in a self-reinforcing cycle of falling prices. Analyzing the current market conditions, it is evident that the loss of critical support at the 50-day Simple Moving Average, SMA, indicates a likelihood of further declines. The Relative Strength Index, RSI, has experienced a decline, suggesting a transition towards a bearish outlook. Should the existing selling pressure continue, critical support levels at $3.2 trillion and $3.1 trillion may be compromised, which could lead to further declines. Nonetheless, there exists the potential for a reversal should there be a resurgence in buying interest. The potential for investors to re-enter the market may facilitate a recovery, allowing it to regain previous levels and potentially test recent peaks. However, the extent of this recovery will be contingent upon overall market dynamics and prevailing investor sentiment. The cryptocurrency market is currently experiencing significant volatility, characterized by potential downside risks as well as opportunities for recovery, which are dependent on critical technical indicators and broader economic conditions. Let's get back to Cathie Wood interview.
I said Bitcoin was rules-based. 21 million units, and we're nearly at 20 million now. So that scarcity value will continue to support Bitcoin going forward.
So you're talking about the stable coin kind of being backed by these, basically by the federal government. Why not just use the digital dollar and develop the digital dollar as that same, with that same appeal?
So I live in Florida, and the governor of Florida, Governor DeSantis, has said he will never allow a central bank digital currency to be used in Florida. I think Texas has said the same thing. This is a states' rights issue, and it's all about privacy. Many people here in Europe don't think we care about privacy. On this one, on this score, we care about privacy, and this president very much supports that point of view. Bitcoin, I don't agree with that at all. I thought where you were going was all of these tokens being issued. We went through another period like this. It was 2017, and Bitcoin that year went from less than $1,000 to $20,000. That was the ICO boom, and most of those failed. So it's buyer beware.
Yeah.
Be careful, and that is why we need some regulation here, because it's out of control, as I think you would say. Bitcoin's a completely different animal, though. Completely different.
Isn't Bitcoin just a correlated asset to tech? That's the lesson from yesterday.
No, it isn't. Actually, it's part of the tech movement.
The correlation on the numbers looks pretty convincing.
It's part of the tech movement. But if you look at Bitcoin, it has served as both a risk-on asset, so that's tech, yes, but also a risk-off asset. When we went through the regional bank crisis in the U.S. in the spring of 23, Bitcoin took off. Why? Because there's no counterparty risk in Bitcoin.
If big tech sells off, will crypto go down significantly?
The correlations are there is a correlation, but it is not as high as, small cap equities to large cap equities. The more institutions get involved, the more correlations will go up. But right now, if you look at the statistics, the correlations in terms of returns and risk among these assets, very different.
Ethereum experienced a difficult beginning to 2025, as its value declined by almost 7% in January. The asset experienced a decline from a peak of $3,400 in early January to a recent trough of $3,170, which stands in contrast to the overall stability observed in the cryptocurrency market, particularly with Bitcoin maintaining its position. In light of the current downturn, historical data indicates that Ethereum may experience a rebound in the upcoming months, given its past performance trends during February and March. Data from CoinGlass indicates that Ethereum has experienced positive returns in February for 5 out of the last 6 years, with significant increases of 46% in February 2024 and 48% in February 2017. March has historically demonstrated a positive trend for Ethereum, with gains recorded in 7 of the past 9 years. The observed historical trends are fostering a sense of optimism among Ethereum traders, as many are projecting a potential rebound in the months of February and March. Market observers maintain a positive outlook, with several highlighting Ethereum's future prospects and the continuous advancements being made by the Ethereum Foundation. Prominent individuals within the community, including engineer and analyst Wolf, have characterized Ethereum as a leading asymmetrical investment opportunity in the market. Additionally, educator Anthony Sano highlighted a resurgence of enthusiasm and a strong desire for advancement among Ethereum stakeholders, which may propel future growth. Currently priced at approximately $3,183. Ethereum remains 35% below its peak value of $4,878, reached in November 2021. Although it has not experienced the rapid growth observed in larger counterparts such as Bitcoin, Solana, or XRP in recent times, Ethereum's long-term prospects, combined with robust community support and historical patterns, indicate that the upcoming months may signal the onset of a price recovery. Nonetheless, Ethereum's price will continue to be influenced by overarching market dynamics and the prevailing sentiment among investors. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.